Today we're going to talk about what is a SMT. Put on your seatbelts. We're about to become a bumpy ride. All right, so divergence is when two things are doing the opposite of each other. When it comes to trading, it's when two correlating assets are doing the opposite of each other. What two correlating assets do we actually care about here at Acosta Funds VIP Discord? There's only two. That is going to be NQ, which I talked about in the first video, and ES, which I talked about in the first video. Now, NQ is the asset that we trade. ES is the asset that we trade alongside NQ. We don't really place trades on that, but you know what I mean? So here we have NQ, ES. If NQ is making higher highs and higher lows, and let's just say this was a fair value gap right here. Now we're going to do the same thing here on S. This is the same exact chart. Typically, when you put your charts side by side, NQ and ES, they're gonna look pretty much the same. But you get these small differences, right? Sometimes large differences. Look, we're in this fair value gap. Do you see here? Let's delete these lines a bit so you can have a better view. Right here, when we are in our point of interest, or POI, the fair value gap, and price is in our fair value gap, and we know we're about to place a trade. The game's on. We also see an SMT divergence, which an SMT divergence is going to be another confluence in order to strengthen our trade. A confluence means, this is helping me get further to my hypotheses. We got a SMT divergence. This is making a lower low, and this is now a higher low. You see what I'm saying? This is a lower low, and it's making an even lower low, right? They did the difference. So when you have the SMT happen on the bottom of the pairs, that is when you're looking for buys. Now, you could also say the same for the top. So if ES did this higher high, maybe inverse the fair value gap, and NQ, had a little comeback, and I know, okay, now I know this high is protected, I'm getting in a sell, and I'm targeting lower liquidity. You don't even know what I'm talking about. Listen, we're gonna hop on the charts, and we're going to further dissect this SMT divergence. Because when this confluence shows up in your trading and everything else is aligned, you take this trade 10 out of 10 times. You hear me? To the charts. SMT divergence, SMT divergence, SMT divergence. Okay, so as soon as we tapped into this fair value gap on the 1 hour, I'm going to the correlating time frame. That is the 5 minute. And when I do that, I'm also going to do that on this chart. So, boom, 5 minute. I'm also gonna do it on this chart. And I'm gonna look for SMT divergence. And little do we see, there's an SMT divergence. We tapped in here, but when we did that, right, we got a higher low, a lower low, and a lower low. Boom, as you can see there, SMT divergence. And you see these same exact candles create a higher low and a higher low. So they're doing the opposite. As soon as I see that, our lows are now protected. If we break that SMT, our entire bias is wrong, and that's okay. But there's a safe place to put our stop loss. This confirms safe.